Hi everyone, welcome back to the Property Finance Podcast, and today I want to cover off a question that comes up a lot, which is actually from two sides of the fence, which is how do I find private investment? And then from a private investor's point of view, how do I protect my investments? So I want to sort of cover off how to find private investment first, because I think it's quite a key question that a lot of people ask, and I think is obviously one of the biggest things when getting into property development, property investing, in terms of what you need within your repertoire of things that you go for. So when looking for private investment, I think it's key that you understand who it is you're going after. So obviously there are numerous FCA rules that you have to cover off, which I won't talk about on this because it'd be a bloody long podcast if we did, but I'll cover that off in a later episode. But when you're going out, you need to understand, are you looking for maybe SaaS investors? Are you looking for those who sort of SaaS investors tend to be a little bit more professional? They tend to be a bit wiser to what you're after. Are you looking for an investor who's maybe got experience in property investment and development themselves already? Because one of the big things when it comes to that is, are you going to have someone that you can then lean on? Are you looking for a business partner as well as an investor? So I think it's key to understand when you're going for the investment, what is it you're actually looking for? So one of the biggest things I've always said is get yourself out to SaaS networking events, because they tend to be pretty busy with SaaS investors. Obviously, sort of name is on the tin. One of the big things you're going to find in those rooms are people who are looking to deploy probably 50% of their SaaS pension. So for those of you that don't know, within the SaaS pension rules, you can lend out 50% of that to someone else. So if you tend to find, I mean, the average SaaS is probably anywhere between 200,000 and $1 million. So you tend to find that the average person is probably going to have minimum 100 grand that they're looking to invest in something. Now, if you're a first time property investor or property developer, that 100 grand can go a long way. For example, when we talk about property development, you tend to find that 10% loan to cost is kind of what you need to put into the deal. So if you assume that 100 grand is coming in, that's your 10%, you assume that you're looking at spending a total of $1 million, which means that you're normally looking at projects of sort of 1.3, 1.4 million. So as you can see, that 100 grand can go quite some distance. Get yourself out to those networking events, sort of put a pitch together, I guess is probably what I would call it. Maybe a pitch deck of what you've done, what you're looking to do, maybe some sort of forecast of, if we're doing X, Y, Z, then obviously we're looking for this amount of money. One of the things that I'm doing at the minute personally is I'm working with a SaaS investor, someone who's invested in the business previously. And we've probably, I mean, I don't mind sharing, but we probably borrowed circa 240,000 so far from this one investor. And we're looking at sort of redeploying those funds again. So we've put together, sort of between the two of us, a business plan of what we want to do moving forward. So we've come up with an idea of, well, we want to invest in lots of single buy-to-lets. So between the two of us, we've looked at, he owns a number of single buy-to-lets himself. Obviously, I've been more predominantly in the development space. I've decided to sort of step back a little bit from that at the moment due to a couple of issues that we've had on one of the sites. So I'm sort of looking at safer ways to invest. So one of the things that we've just sort of decided on is, look, we're going to do maybe 2 or 3 at a time, finding small single let properties, putting in, I mean, this 240 where we're based in Lincolnshire, that 240 can easily be the deposit on 3 decent sized 3-bed houses. Get them, renovate them, and then either flip or refinance them. And we've put together a business plan, sort of a forecast over the next few years, what it's going to look like, how it could work, who's doing what. And the other thing that we did as well when we sat down and sort of looked at what we were going to do is set out instantaneously clear, defined job roles. And this is something that I think a lot of people, when they're getting into joint ventures or working with investors, is setting out clear, defined job roles. Right, I'm going to focus on this, you're going to focus on that. So his job role is purely finding the properties. He has a build team already, so also within his job is actually doing the refurb as well. My job role is very clearly finance. Obviously, it's my area of expertise, so I will focus purely on the finance. So between the two of us, we've kind of covered all bases. We've got the finance sorted, we've got the build sorted, and then he's got a refinancing mechanism already in place where he's refinancing these pretty quickly. That's all in place already as well. So we've got a pretty clean structure. But all of that started from presenting an idea and creating sort of a business plan and forecast and everything else. So when you're going to networking events and things and you're meeting people who have got money, it's very handy to go, right, here's what I'm looking to do. Here's what it could look like. If you invest here, this is what it could look like in 2, 3, 4 years' time. And I think that's key for people who are looking to invest their pensions, especially for them to understand what that journey looks like. So SaaS networking events, 100% are a great place to start. You'll also find that there are sort of pension providers, I don't know the best way of describing it, trustees who look to deploy funds on behalf of their trustees as well. So what will happen is you will go to them, you'll present an idea, and then they have a pool of sort of SaaS pensions that they can dip into and obviously look to invest. They are much harder to get into, but it's worth having a look at some of those. And I'm more than happy to share a couple of names with people if they want to sort of ask me where they should go for that. More than happy to sort of share that. So there's some of the SaaS ideas. Obviously, getting out and networking, showing people what you're doing is always key. So getting on Instagram, Facebook, LinkedIn. LinkedIn is probably where I would go for the more professional investors. So if you're getting investment from people off of LinkedIn, for example, you are dealing with naturally a higher caliber of investor, people who are probably a little more switched on in terms of what they're doing. Whereas if you're getting investment from someone off Facebook or Instagram, you tend to be dealing with people who maybe aren't as sophisticated in terms of their investments, but who are maybe looking for more creative strategies. So they may be open to deferred payments. They may be open to dealing with option agreements, for example. So they're going to understand the more creative side potentially a little more. It's all about getting yourself out there as much as possible in terms of finding investment. So just let everyone know what you're doing all the time. And the key bit as well, I think, for once you've found investment, it's about keeping investment as well, because one of the biggest things that I've found is people tend to find private investment and then they tend to go a bit mental and go and get loads of other investment. And because they've got one investor on board, other investors naturally sort of gravitate towards them and say, oh, okay, well, such and such has invested in you, so you must be trustworthy. And yeah, okay, we might be interested in investing as well. You've got to make sure that you can look after these investments, because the amount of people on social media who are currently at the point of recording this being outed, I guess is probably the best way of describing it, for messing up investments or for losing investor money is beyond anything I've ever seen for the last 8 years. So it's really, really key that you understand your business model, what you're doing, and how you can get investors' money back as well. So you've got to have contingency plans in place. Don't get drawn into what we've seen a lot of people doing at the moment, which is Ponzi schemes, which essentially you are bringing in new investors to pay off previous investors. Very definition of a pyramid scheme. So try and avoid that where you can, because it just really does land you in hot water. And I think taking it slowly with private investors is always the best way of working things. So get the money in, deal with it, get it repaid, move on to the next one. Don't do what some people do, which is get one investor in and then all of a sudden get 10 more investors in straight away. When it comes to being an investor, so I've invested in a number of deals and have lost money on pretty much every one of those deals, I think, so far, for various different reasons. I mean, I, of all people, know how to protect my money, but it doesn't stop you from losing money. So when it comes to lending money out to people, the first thing is do your due diligence. So I can't stress this point enough, is understand who you are lending money to. Have they got loads of other investors in place? Are you essentially investing for them to pay back other investors? Where's this money going to? Is it going into a specific project? Is it just going into a bank account to be deployed in 35 different directions? Understanding that is key. Obviously, a solicitor will be able to work with you on that and obviously track where things are going and what you're investing into. The second bit is don't rely on personal guarantees. So that is probably one of the biggest lessons I've learnt. Probably one of the biggest lessons that any lender has probably learnt. So personal guarantees are pretty much not worth the paper that they're written on. So you'll find very, very quickly that if you try and enforce on a personal guarantee, there's not a huge amount you can do. Some people have managed to do it, and okay, they might have got some of their money back through personal guarantees, but most people that I'm aware of haven't got any money back through going after a personal guarantee. They're very onerous to sort of enforce. They're very difficult to enforce, and very quickly you'll realise that they're just not worthwhile. So I would say, without a shadow of a doubt, always try and take a charge over the property, because that's far easier to enforce. It's far easier to make sure that you're top of the list all the time. It's way, way easier to deal with. That being said, if the person that you're investing in is obviously taking bridging finance or development finance, obviously there's going to be a first charge in place already, which means that your second charge will sit behind an institutional lender. If your investment sits behind an institutional lender, you will have to sign a deed of subordination or a deed of priority, whatever you want to call it. And essentially that means that your powers become pretty worthless in that second charge position because the first charge holder has all of the control. That being said, if anything goes wrong, obviously you are going to be second in the queue to get some money out, which means that you would get money out before the person that you've invested in, etc. So I think taking a second charge is better than nothing. Obviously, the absolute dream scenario for you as an investor would be to take a first charge, because then you have complete control over the project. And also the other thing as well is that if you're an investor and you're investing into an asset and you have first charge, well, if things go wrong, you have that asset, and it's a case of you taking that asset back. So I think that's some of sort of the key points that I would look at. The other bit that I think you need to be careful of if you are sort of becoming an investor and investing in someone, as well as doing your due diligence on them, it's key to do obviously your checks on the property as well, because obviously you want to make sure that you're investing in something that's profitable. You want to make sure that you're investing in something that essentially is going to do what they say it's going to do. So double check over the business plan, double check over the project that they're investing in. And essentially, once you've checked all those numbers, if you can get comfortable, and there's no harm in you checking for valuations, for example. There's no harm in you getting copies of the valuation, getting copies of quantity surveyor reports, for example, if it's a development deal that they're working on. There's no harm in you getting hold of those reports. There's no harm in you speaking to the broker. There's no harm in you speaking to the lender. Obviously, you need to get involved in that deal as best you can if you're going to be the investor. If you go into a joint venture, obviously the thing that you need to bear in mind is that if you are signing up to personal guarantees, etc., with this investor, is obviously if something goes wrong, you are on the line as well. So if you are going into a joint venture, I think you need to go into it with your eyes open that actually you could go down with them if they do go down. So well worth keeping that in mind as well. So hopefully it's been helpful to sort of understand what you need to do as an investor, what you need to do as a developer to find investors, and sort of try to approach it from both sides of the fence, really, just to give both sides, because I know a lot of different people listen to these podcasts, so hopefully that kind of gives a few tips from both sides in terms of what you need to be looking for and what you need to work on, and sort of the understanding you need to have before moving forward. And yeah, obviously there's a few lessons learned from me there as well. So hopefully you've enjoyed this one. Hopefully you found it helpful. I'll catch you on the next one.